Hey traders, good morning everyone and welcome to another live trading webinar. How is everyone doing today? Larry, good morning Larry. Ibrahim, good morning. I hope you're doing great, both of you guys and of course everybody else. So until we get warm up, let's go through the risk disclaimer and simply states that this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. So how to listen to the audio on the podcast about fundamental analysis I prepare every week for you guys. Simply visit admiralmarkets.com, and once you get on the page at the analytics, you click weekly trading podcast from the analytics section. You scroll down and you can download it on the Spotify, Apple Podcast, or any other platform you're using. And of course, please make sure you download the mobile application so you have your everything on your phone. Nicholas, how are you doing? Radov said, good morning, my friend. So let's start with the pound against the dollar. Guys, remember, any questions you may have, please put them on the chat box. So, pound against the US dollar. This is the 4-hour chart. We identified this inside resistance yesterday at New York session. The market put this rejection candle here. Very simple trade for price action traders to short this pair, or if you prefer daily chart, if you were waiting like me on the daily chart to get the price a little bit higher, you wouldn't have taken the signal on the 4-hour chart, of course. Now, let's clarify something. I think it's worth a bit of attention. So, there are traders that, like myself, that they use the daily chart for their direction. Sorry, weekly chart for direction, daily chart for execution. Now, based on this weekly analysis we did yesterday and based on the daily construction, I'm expecting the price to retrace a bit higher, and then I will start looking for shorts. As I explained yesterday, I did the analysis of this impulse leg, and it's very clear. So for me, I will be waiting the price to come at this area, and then I will be looking to short it. But there are traders, and again, that's one approach. There are traders, maybe you guys, you don't like to look at the daily chart, and that's okay. There is no right and wrong in trading. In trading, the only thing matters is high probability and low probability, and right and wrong doesn't exist. So if you are looking only on the 4-hour chart, and you are waiting, you see structure on the 4-hour chart, right? Like this one here. That was very clear. Price made a lower low and lower high, of course. And what can we observe on the last impulse move to the downside? We see that there is an inside resistance. Now, remember, what an inside resistance is, the previous swing low, it has not penetrated by at least 2 candles in the row on the left and by at least 1 candle on the right. Then this, and the penetration, it's only under a heavy volume like the one you see here. And there is only one interaction with this one. So that was the low. It broke into the downside and price retested yesterday at this 4-hour chart. Now, how could you, and ideally, how do you trade intraday? What is the strategy to trade intraday? You find, let's say you are on the 4-hour chart and you do analysis. Let's say you don't find anything here, but you spot this area here. So intraday means to simply wait for some, in my for high probability intraday setups, it means to wait for a lower time frame price to approach a higher time frames area of resistance in a downtrend, and to look for catalysts to short. Some of these catalysts might be price action. Other catalysts, like this one here, other catalysts might be change of direction, like market makes a higher high and higher lows, and once it comes here, maybe a double or triple top, and you can play the breakout. Nothing wrong to take breakout strategies as long as are in a content of the higher time frame. Or you can wait to use a smaller area of resistance at that lower time frame. That's what they call it, order block trading and all this stuff. So you can use whatever suits your trading personality, guys. Okay. Elena, Ruben, good morning, guys. Mr. Carlos, Ruben, Irene, good morning, everyone. Good morning. So if we mark this area like it's a resistance here, and we go to the 1-hour chart, here, you see that was the low, and here is the price. We see the price made on a reversal price action pattern at 5 p.m. broker time or 3 p.m. London time, and from then the market, let's say a sell stop below the low of this candle, a stop loss above the high of this candle. It's give it or take 20 pips with 2 to 1, 40 pips. It's somewhere here. So if someone took this trade, it must be still in the trade. Or if you go to the 5-minute chart and you're trying to find some new lower high and lower low, nothing here, nothing there. Only this morning came a retest at this one here. So on the 5-minute chart, it was nothing based on lower highs and lower lows or structure to trade. On the hourly chart, it was something, a price action trading setup. Now, I see traders, they are scared to miss out of opportunities and they are trying to be all over the place. And that's not the right approach in trading, guys. All right, try to be patient. And I told you many times, maybe you are watching a level for days or for hours, price hit at that level, and you don't find a way to enter. But again, that's trading. We have to deal with that, and we have to be okay with that. You can apply this methodology on every single tradable asset you are trading. Okay. If you are trading intraday, though, I will highly encourage you to stick with the majors, Euro USD, Pound, Aussie, and the rest. You can try some indices if you have a little bit of experience, and pretty much that's all. Don't try to mix the euro with the Kiwi, the Aussie with the Canadian dollar. Leave them for higher time frames if you are a daily price action trader, okay? Because you need to have some you need to put attention and effort to think and try to remember the market, how it behaves. Each currency pair has a different character. USD JPY, for example, totally different character than the Australian dollar, US dollar. At first, it's more volatile, and the swings last longer on the USD JPY than compared to the Australian dollar, US dollar. Now, why is that? Different economies, different also fundamentals. So yeah, that's it. As we are on the USD JPY, let's do some analysis here. So the indicator moves in lower pace, price moves in higher pace. There is a disagreement between these two. And price yesterday found some support in the middle of the Bollinger Band. But again, I'm saying that I don't start my analysis on the Bollinger Band, and many traders, they do that. They get confused because they're trying to find a setup here. But remember, if we are a daily price action trader, we use the weekly chart for our analysis. Weekly chart, it's in a strong uptrend. Market makes higher highs and higher lows. And therefore, having this in mind, if we execute on the daily or on the 4-hour or on the 8-hour chart, we have to, in my opinion, look for longs now, because the higher time frame is bullish. So no reason for me to look for short unless there is a strong resistance and unless there is a price action pattern printed on the chart. Now, on the daily chart, there is no signal to take it to the upside. On the 4-hour chart, there is also no signal to take it to the upside. I will keep an eye for a maybe nice double bottom at this point here, and let's see what's going to happen. So this is my analysis for the USD JPY. Euro US dollar. Look at these guys. Yesterday we marked this inside resistance. It's the most powerful trading areas to identify them and just go on any time frame and just pick up a trade based on the your entry parameters. So daily chart price, daily chart is in a downtrend. Weekly chart, first weekly chart is in a downtrend, so we can look for shorts on the daily chart or 4-hour chart. On the 4-hour chart, early this morning, this lucrative reversal price action appeared. It has, let's say, 30 pips stop loss, and it can give easy 50 pips until it retested the most recent swing low. On the hourly chart, it was this candle here, again, strong rejection. On a 5-minute chart, it was pretty much nothing. Okay, so again, guys, stick to one strategy, a couple of methods to enter the market, and trust me, that's all you need in trading. The less is more in trading, is not the opposite. Next, the US dollar, so short bias for that one. Australian dollar against the US dollar. See, we put this area of resistance at this point here. On the 4-hour chart, though, multiple rejections yesterday. And on the 1-hour chart, pretty much no price action set up here. On the 5-minute chart, any change of market bias? No, very messy here. So daily chart approaches at an area of resistance. Ideally, if we want to scalp the market this is a good area to find some catalyst, a strong price action, and go short to take, let's say, 20, 40 pips out of the market. And that's how we, again, I repeat, that's how we do our intraday trading. Next one, New Zealand US dollar. Pretty similar with the Australian dollar, US dollar. As we see, there is an area of resistance here, so we can go to lower time frames, 1 hour chart. Market looks like it changed some. That was the low, that was the high. It's pushing backwards. There is nothing within this pattern to trade. Do you guys understand why this is the low and this is the high? Do you understand why the A is the low and the B is the high, and this and this and this and this and that, the C, D, E, F, G, all these 5 points are not into the market structure, not, because the latest impulse move that created a new high in the market, it was the swing from A to B. Therefore, we mark the lowest because it's in an uptrend. The A, it's the low, the B is the high, and once this penetrated decisively, then we're going to have a new high and a new low. Ruben asks, are you going to talk about the other strategy on DAX today? Good morning, Maria. I will try. Guys, I don't have, I need to be live to explain you that strategy, but I will try to use a different approach in the next few sessions on the DAX, because I receive different emails that make me a bit skeptical on how you guys trade, and I will try to show you something else today. We're going to still trade the DAX, don't worry about that, but a little bit different. It's going to be the same trading, exactly the same trading. For some experienced traders, you will guys understand that we're going to do exactly the same thing, but in a different way. Other people, they're going to maybe understand it better. So, USD Canadian dollar, finally, look at this, guys. Weekly chart at an area of strong resistance. We can monitor the daily chart. I wouldn't really like to monitor the 4-hour chart, to be honest. I prefer to monitor, if you have on your MetaTrader the 8-hour candles, that will be ideally. Or if you don't have it, be patient. When we implement with TradingView, you're going to have it. On the 8-hour chart, why I like the 8 hours? Because 8 hours is the duration of each candle. Now, 3 trading sessions, they consist 1 daily candle. So the 8-hour chart, it gives some more better understanding of some sessions. Like it starts from the 12 a.m. I'm talking now based on broker time. Okay, broker time is the EEST time zone. We are plus 2 hours. We are 2 hours ahead of GMT. So 12 a.m. local time, broker time, until 8 a.m. it's when the Frankfurt Stock Exchange opens. So you take pretty much the duration of the Tokyo Sydney session really well, all in one candle. Then from 8 a.m. to 16, that it's 4 p.m. broker time, or 2 p.m. UK time, London time. It's right pretty much at the New York Open. So you cover the whole European session, and then you're going to see the whole New York session. So you have basically the Asian session all in once, the European session in another candle, and the New York session in another candle. That's why I prefer the 8-hour candles. Okay, by all means, we can still trading and without them. Okay, don't worry if you don't have them available on your charting software, but that's the reason behind I do prefer it. Excuse me, guys. Let me check here. Guys, bear with me for a second. Sorry for that. So Canadian dollar, US dollar against the Canadian dollar. We found a resistance at this area here, 1 point something. Then on the daily chart, a reversal price action inside reversal price action can be considered this candle at resistance. And bearish divergence on the RSI. So we could have traded to the short side. Let's check the 8-hour chart for some more. It wasn't any privilege or advantage to trade price action on the 4-hour chart, though. You can see it here. It was an inside, very tiny inside candle, and we shouldn't have taken it to the short. So that's it from there. And USD CHF, let's change the template. Much better. Weekly chart. You guys see USD CHF. USD broke and maintained outside of this 10-period moving average. So considering the fact that the US dollar is stronger in general, we can see some more push to the upside. Although you see it's been 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row with no any kind of correction. So I wouldn't try to buy anything here, because trading the Bollinger Bands, either we're going to buy a reversal price action in the middle, or we're going to buy a reversal price action from the top of the Bollinger Band. But I don't trade any breakouts at the top of the Bollinger Bands on these time frames. Next one, Euro JPY. Weekly chart in an uptrend, as you see, higher highs and higher lows, although it lacks momentum because these tails left behind in the market. It's not the best market I like. Price action, although weekly it's in an uptrend, there is a strong support found at this level here, as you guys see. Price action yesterday on the daily chart was a hammer, nice reversal. On the 8-hour chart, it was nothing here. So back to the daily. And for price action traders, if they find this appropriate, they can buy this move to the upside. But for somebody who was watching this level on the daily chart, not even looking the weekly, but watching this level on the daily, and identified that there are some tails here that they push the price away from the support, then could go to the lower time frames like 1-hour chart Actually, 1 hour chart, it's really good time frame to trade intraday if you are a price action trader. But if you are trading order blocks, market structure, and all this stuff, then definitely you need to be on the 15 or ideally on the 5-minute chart. Okay, so yesterday the market broke well outside of this, below this support, and then it pushed to the upside and it came to retest. It's not something I would like to get involved, to be honest. And yeah, you see, guys, in every market you're gonna change. It's gonna appear some opportunities. You're gonna find ways that you can trade, and always there are gonna be opportunities. The point in trading is to do something and be consistent. And when we say to do something and be consistent, we don't mean that we're going to win all the time. Consistency, not on winning, consistency on a trading execution. Okay, so here is the thing now with the DAX. Let's start on the daily chart to see if there is some structure here. I marked earlier the high of the previous day, the low of the previous day. Now, based on market structure here, there is nothing clear. Market makes like this. It doesn't have any character. We don't have, it's not in a clear range, to be honest. Clear range was this one here. But this one not. So it's very low probability setups, this one. And if you want to trade like we used to trade the last couple of days, you can feel free to reduce your lot size if you are trading with quite big lots. So if you want to use the hourly chart, like this one here, instead of 5-minute chart, the swing on the 5-minute chart, it's the high of the hourly chart, the swing high, and the low of the hourly chart. So if you go on the 5-minute chart, this high here and this low here is the hourly price action. Okay. Now, 1 minute for the London Open. If for some people the moving average can be explained as support, you can easily place a buy stop order above here. That's what I'm planning to do. 35 pips for the market, points for the market to retest this next level of resistance. So I'm going to go with a buy stop here, and I'm going to have a stop loss of 20 pips. Now, what we see, the price is creating a bearish engulfing on the hourly chart. Okay, now I use a little bit different approach than the normal one. Few seconds for the London Open. That's a bearish engulfing here. If you believe that the market can push to the downside, you can also place a sell stop order for this bearish engulfing. So if you want to stick to the hourly chart and box the hourly candle to trade, if you feel that it's less stressful for you, you can do that. So let's check the 15-minute, 5-minute. It's going to break either to the upside or to the downside, guys. Okay, it's the hourly candle, and the market, it's going to move either way. If this is going to get triggered, though, again, I would like to go for 20 pip Okay, we got triggered to the downside. I will go for 15 pip stop loss. $15 points. I will delete the buy stop order, and I will go for a take profit of 30 points. So that's a 2-to-1. Remember, doing that and trading this way, always be prepared to lose 60 trades and win only 40 trades. But be prepared that this trade can be a losing trade, the next one, the next one, the next one. You have to go through 60 trades. That's the probabilities. Okay, we go to 2-to-1. We ideally get about a 40% winning ratio. So to get to that 40% winning ratio, we have to go through the 60% losing ratio. Okay, so everything in place here. For traders, they want to go only for 10 points. Here it's the area that you are about to, let's say, get out of the position. For traders, they are trading, let's say, order blocks in this area here. There is another setup can be used for short sales. Okay, guys, so far the trade is moving pretty well. 10 points for those who want to close the trade already been placed. So that's all from me. I would like to wish to everyone to have a fantastic day ahead. Thank you so much for your participation. I hope you find value on this webinar. Please make sure you like and subscribe on the YouTube channel and the video. And I wish you best in your trading, and I look forward to see you tomorrow at the same time. Thank you so much.